What up, everybody? Welcome back to Royal Blu FX. In today's video, we're going to go over some of the trades that I've taken this week, this Friday actually. You're going to see some of the strategy that I use, so I encourage you guys to watch this whole video from beginning to end, because I'm telling you, everything that I put in this video is there's a lot of hot sauce. I'm telling you guys because you guys don't want to miss out all the facts that I put in there. I'm serious. I'm being serious. Also, before I begin on the video, guys, I do want to mention that we do have a very, very low price on one of our courses right now that's running at $249 for coaching and mentoring, guys. Go ahead and check out the link right now, right here at Royal Blu FX to start your subscription today with us. And without any further ado, let's begin with this video.
Friday, guys, and so in this video, I'm going to show you guys how we took these trades, obviously. So if I zoom out, I want to show you something, guys. Okay, when I trade, I normally start on a 30-minute because the theory goes as, you know, when I look at the sessions, okay, when I look at the sessions like this, you can see that the sessions don't run that much, right? These pink zones or pink areas actually are the sessions, New York session, obviously. So I notice that when you're on a 30-minute, price doesn't run anywhere that fast, right? I'm an intraday trader. I'm not a, you know, I don't hold trades for a very long time. I can hold them only for like about maybe 10 to 15, 20 minutes, maybe an hour, maybe 2 hours at most, and that's about it. So I start on the 30-minute time frame, right? Sometimes I go up to the 4-hour and sometimes even on the daily, just to get an overview of what is actually happening. So right here, this session, this pink area here that you see is the New York session on Friday. You can see right here it started at 6:30 a.m. Los Angeles time, which is 9:30 a.m. New York time. Okay, so this is where price started, right? And this is what the session was doing this entire day. Now, I was anticipating that price was going to go bullish the entire day. That's what we're looking at. We're looking to target this high here on the 30-minute high, right? So that's why I love using the 30-minute time frame, and because I know that the sessions won't run, you know, for a long time. Obviously, we're not trying to reach whatever high or whatever low, you know, depending on where we're trading, obviously. But having said that, this is why I use the 30-minute as my higher time frame. So let me just toggle out of there and get out of here. So now what am I doing here? Okay, it's really important to understand price behavior. I know a lot of you guys are typically taught sort of, you know, that the swing low, swing highs, the break of structures, and then just look for buy or whatever, right? Look at a buy on a demand zone and look at sell on a supply zone. So in this case, what we teach here at Royal Blu FX is supply and demand, right? Your typical supply and demand, which is your lower lows, lower highs, which is your swing high, swing lows, right? This is your typical supply and demand, right? You're following demand bullish, and then you're also following supply bearish, just like this, right? It's nonstop, just like this, okay? So that's your typical supply and demand, right? And then what we teach is your flips. What are the difference between flips? And we also teach you the reaction points in the market, right? So if prices are going bullish, there's reaction points like this, right? This is a demand, this is another demand, right? We know that when prices are bearish, if prices are going bearish, demand has to fail. We know when price goes bullish, supply has to fail. So if we're seeing something like this, right, something like this, you know that supply has to fail, just like this, right, just like this, because we know prices are going bullish. So the market is fractal in many ways because it shows itself the same way like it does on every time frame. So right here, as you see, this is a reaction point in the market. On the 30-minute, right here is a major supply zone. So obviously on this far left here, now I'm going to go all the way on the daily here so you guys can see what actually happened, so you guys can see everything here. This is the new high, all-time high on the US 30 right over here. So there isn't actually any data that has been recorded here all the way on the far left right over here, as you guys can see, right? There's nothing, right? So you might be asking yourself, well, why is this a supply zone, right? Why were you actually looking for buys here? Why do you think this is an actual supply zone? Well, it's a supply zone for one thing, because this, to me, in fact, what we teach here is the silent, we call it the silent supply or demand zone, right? So when we're reaching a new high in the market and price retraces like this, this is a silent supply, which means in theory there is supposed to be more supply on this large supply zone here, right? So there was supposed to be supply going like this, right? This is why there was suppliers in this zone responding to these guys here, right? They were responding based on the previous supply right over here. So that's where they were selling off and then going bullish, right? So this would be a reaction point to us. And on the 30-minute, we're anticipating the price comes down to this order block right here. Okay, once that has happened, then we're waiting for price to switch. So I'm going to go down all the way down to 3-minute, even to the 1 minute. But let me see where 6:30 is so I can show you guys a lot better what price was doing right here. So right here you can see price ran all the way up on 6:30. So this is 6:27. Let me even just get back out of here. So I didn't catch the open, although I always catch the opens. I wasn't here at the time when the open happened. There you go. You can see 6:27 right there. So obviously we marked out this demand zone here because this demand zone here was responding, excuse me, this demand zone here, this move is responding to this demand zone here, right? We're not looking for buys here, obviously. We're going to be looking for sells, and hence this is why we have this area here as a buy to sell reaction point in the market. So if I go all the way, zoom out here, you'll see right here, right all the way over here, we have a demand zone that's responding to a previous old demand zone right there. That's a demand zone right there, right? Here's another demand zone, right? So like naturally, price should go bullish, right? We're anticipating for price to come here. We're not actually looking to buy from this demand zone. We're actually looking for price to react from this demand zone, then to retrace all the way here for the sell-off. Unfortunately, I wasn't here for the sell again, but you know, it's no biggie because I would have been able to catch this whole move down here on the 1 minute. But we're going to talk about the trades that I did take right here. So this would have been one whole amazing move, right? There's your order block right there. There's your entire sell. Hold it until you hit this low, right? Okay, so let's continue. So price is going bearish. We know our intent is going bearish right now. However, we can't forget that we're looking for buys as well. When I show you guys the 30-minute again, right, we're all the way right here on the demand zone, which means we are in the discount, which means we should be looking for buys, okay? However, down here in the 1 minute, I'm also looking at the 1 minute as my higher time frame perspective, okay? There's a thing when you guys are learning our core, you know, when you excuse me, I'm kind of fumbling my words here. When you are learning from what we're teaching in our courses, you'll understand how supply and demand is different and fractal in multiple ways, just because, and perspective, okay? So we teach a perspective, obviously. You can look at this as the 1 minute higher time frame, obviously, right? The 1 minute's higher than the 5 seconds, so I could easily go down on the 5 seconds to use it as my entry time frame. So I use my 1 minute higher time frame, and that's my perspective, right? And the 5 seconds as my lower time frame perspective for entries only. So let me just go down here. I'm going to show you what happened, right? So we were here at the time when price was doing all this stuff. You can see here we had another reaction point here. You see that there was demand here, more demand coming into the market like this, right? Price broke, swept liquidity, and then started going bearish. So now this to me here is a reaction point. In fact, it's a different type of reaction point. It's actually a flip right there. That's a flip, and I like to mark my flips in pink zones because they are very effective. Okay, the flips are the very first failed supply or failed demand while price flips and goes the other and runs the other way. Okay, so price was at its high, right, and then price just starts to flip when price breaks a new low, like this right here. Okay, when price breaks low, you'll see in here between this low and this high, there's your buy to sell, that's your flip, and this is where you're looking for entries, right? However, again, I go all the way down on the 5 seconds, all the way down here. So you might be asking me, well, why are you looking for sells when you should be looking for buys? Good question, because we haven't actually mitigated the order block, but now we did. Let me just zoom out here all the way on the 1 minute. Okay, notice if I put the line chart on here, notice that this low didn't actually even touch the zone, but now it has, right? So obviously there's a little more juice, a little more fuel right over here for price to come and mitigate and then continue. Of course, I'm risking it. This is a little too risky. It's not your high probability entry trades that you should be taking, the high probability trade is the one that should be going bullish because the 30 minutes says that we're bullish. So in here, however, we did actually find out that price needs to go bearish here because there's one tap here, right? We waited for price. This was the last supply zone here for price to come here. Now, again, why are we selling here? It's because we have a buy to sell candle here. And this buy to sell is a reaction in the market. Notice that this is a major demand zone here that we have, and another demand has taken place right in here. Once price has been bought, and it's sold quickly, which means there are banks involved in these reaction points. Anytime there are reaction points in the market, the banks are always involved. They're always involved either way, in every way, right? But they're the ones who push price bearish or bullish, right? Impulsively speaking. And we can't do that, right? So when price taps here, right, you can see price just runs. It doesn't even break. It breaks, but it doesn't mitigate, right? The way we want price to naturally and theoretically want price to do, right? So it doesn't do that, and it leaves all this as imbalance, and it leaves inducements in the market, right? So we're anticipating for price to get back up there for the sell. Let's play this quickly here, show you guys what I did here, what I did right over here. Let me just play this quick, okay? I was actually in bed while I was trading this. Probably shouldn't be looking at the phone while you're trading in bed, but it depends. Right, there we go. So there's your order block right there, as you see. Now, the reason why that's our order block is because we see here this demand zone, right, responded to something in here that we can't see, but we had a break of structure here, and when the break has happened, this was the last demand buy to sell right there. So that's why we waited for price to get up to that supply zone in there, and then we took our entry there, right? We didn't look for confirmation. We just took it aggressively because we knew this was the last supply zone, right? And if price should ever take liquidity, it would sweep the lows and the highs to continue bullish. So let's continue here, right? Okay. Here we go. Let me just play this quickly. There we go. TP'd, right? All right, there we go. So now price just created so much liquidity here, right? And this is what we were waiting for. We waited for price to take out the lows, right? And that's it. That's all I did. And now from here, I was only looking for confirmation going bullish. So let's go on the 1 minute time frame, okay? There we go. And I'm using the same thing I did here with just reaction points. So when prices are going bullish, this is the flip right here that you see, sell to buy, because that was the last supply that responded to this previous supply here. And then price then flips, right? Notice I didn't enter here, nothing, obviously, because there's nothing to enter from. Price starts to run. So now we saw this is a flip because it happened right when demand swept the liquidity here, and we had price run up fast. Okay, so here's more supply here, right? I could have looked for sales to go down. Obviously, I'm on the 1 minute. I'm not going to just sell there. But this is my next buy. This is where buying, the buying pressure should come into place because of our last sell to buy, the last demand, the last flip area that has happened, right? So anything after the flip is just reaction points for us. Let's continue, right? So we're on the 5 seconds, I believe, for this one. Yes, and we're just monitoring price, making sure that prices are actually taking out every supply that we see, right? Because when you're going bullish, every supply has to fail, everything, right? So all these will become our reaction points, reaction points, reaction points in the markets, right there. Okay, and then everything was healthy. Obviously, we had some good order flow going bullish. Now let's go back on the 1 minute, and then I'll be honest, I naturally wanted to hold this like this. But since I was thinking, okay, this is Friday, you know, I don't know if I'm comfortable to hold trades over on the weekend. Obviously, I just want to be in and out for this one, right? If this was Monday or Tuesday or Wednesday or Thursday, maybe Thursday, I would probably like to hold trades like this. But I don't hold them overnight. I just hold them throughout the day, maybe. But normally, I'm in it for like maximum maybe 2 hours and I'm out. Okay, so let's continue. So here we see some rejection. You can see there's a rejection happening, right? Respecting the supply zone. Price flips from there, then disrespects this demand zone here, going bearish, right? I wanted to buy from here. I didn't. I don't know what I was doing. I think I fell asleep and then I woke up kind of quickly again. Anyway, so once this happened, right, there's your other demand zone actually right there. And the reason why that's your demand zone is because, again, we have a reaction point in the market. We have a supply and another supply. Excuse me, somebody's out there honking. We have two supplies, right, intact like this. Price flips, comes back over here, and then we continue. So once I understood that this demand has to go bullish, right, then the internal structure from here, from this low to this high, has to go bullish, because this is an internal structure to this main low in here. So that's why I'm buying here, right? So once we're going bullish, I want to show you guys something here. Again, what do we see? We see supply, and then another more supply that failed, went up, and then I took the entry again from there to go bullish, right? So, and we're only targeting this high at minimum, and then this is what happened. Okay, finished there nice and strong. Boom, we're done. So that's it, guys. That's how it's done. That's how I trade on a day-to-day basis. And it's really, it shouldn't be what do you call it, too complicated. A lot of people complicate this stuff, but it's really just supply and demand. Okay, there's like I mentioned, there's three types of the way supply and demand works: as your normal higher highs and higher lows, right? And then reaction points with flips in the markets. And then the theory goes like this for us at Royal Blu FX, that liquidity is a given in the market. So we don't just hunt for liquidity, because liquidity is a given in the market, which means if prices are going bullish like this, right, and we know this is our demand zone here, and all this is happening, inducements, more buying pressure, right, liquidity, whatever, okay, we know price should come here, right, to go bullish. So one of the things I want to tell you guys is that, you know, the way we trade, what we're thinking psychologically is, let's go find that order block and or, you know, more so the order block and or supply and demand, and actually enter from there, because supply and demand are order blocks on higher time frames, right, and on lower time frames. It doesn't matter, because everything is fractal. So to look for the actual order block is really, it's essentially the last sell or the last down move or the last up move. Okay, that's like something like this. If prices are going bullish, right, and price does this, right, breaks a new high, right, where's the order block? It's right here. This down move can consist of like 2 to 3, 5, 10 candles, whatever, right, like that. There can be 10 candles, whatever, up here. However, I highlight this whole entire move and wait for price to get in there, hit that 50% like this to go bullish, because 50% is what I always look for price to always come to mitigate the 50% EQ, right? So it'll jump it, it'll come in here and then run. And sometimes it doesn't. Sometimes it actually just comes right in here into the zone and it just runs like this, right? Which can be translated as a breaker block, because a lot of imbalance. Actually, we'll talk about what a breaker block is in another video, but anyway, this is how I do it, right? I just look for the supply and demand, right? Wait for there to enter there, boom, right? And continue, buy, right? And obviously, we can go on and on and on about this, but you know, you need to look and pay attention to your major structure, because eventually all these demand zones will be cleaned like this, right? This will be liquidity, right? We have then maybe something, maybe like a major swing low like this, the price is trying to come down to, right, in order to go bullish like that, right? So all right, guys, I hope you learned something in this video. If you have any questions, please comment down below and or hit me up anytime on Instagram. I'm always live on Instagram. Excuse me, not live. I'm always active on Instagram. So go ahead and hit me up on Instagram or YouTube, and let me know what you guys think about this video and other future subjects. Until then, guys, I will see you in the next.